you're falling into a typical bull market. And the bull market, as we've discussed before, shakes off as many longs as they can. And
You're watching Silver News Daily. Subscribe for more. Can you imagine silver reaching $1,000 in just a few months? According to renowned market analyst David Morgan, this explosive rise could be right around the corner. What would it mean for your investments, your wealth, and the broader financial market? Today, we're diving deep into why silver could skyrocket by the end of summer and what you need to know to stay ahead of the curve. In this video, we'll explore the latest market trends, technical indicators, and expert predictions that suggest a monumental rise in silver prices. You'll discover how global economic factors, including the fluctuating US dollar and geopolitical tensions, are setting the stage for a potential silver surge. We'll break down the concept of a silver short squeeze, drawing parallels to the GameStop phenomenon, and explain how retail investors are shaking up the market. But that's not all. We'll also delve into the growing industrial demand for silver, particularly in the booming sectors of solar energy and electronics. This demand is a crucial piece of the puzzle that could drive prices even higher. And as always, we'll provide insights from top market experts, including the bold predictions from David Morgan himself. Make sure to watch until the end to understand how all these elements come together to create a perfect storm for silver prices. This information could be vital for your next investment move. Don't miss out on this opportunity to protect and grow your wealth with silver. Stay tuned, subscribe, and let's uncover the incredible potential of silver in the coming months.
you want to know you are, a free market thinker, and then allow your guests to state their views, whether you agree with them or not. But as an American, I really feel disheartened because really, if you go back to the beginning, if we just held to the Minsk agreement with Russia, in other words, had we, the United States, kept our word, we wouldn't be where we're at right now. And we probably could go back to saying, well, we screwed up and we broke our word. We're gonna make it right. We're gonna live our word. We're going to go back to that agreement, probably end everything. And yet here we are contemplating that fate of our future is potentially, I'm not saying absolutely, but potentially in the hands of a foreign country that might use U.S. weaponry into Russia, hit a target that's of such high value that they are compelled, from their perspective, to retaliate. And this is very scary times. I really don't even like saying it, because there's still some amount of people that just absorb the mainstream media, and maybe they'll stumble upon this channel and realize that this is no joke and this is not fear mongering. You should be scared. You should be really scared, because when you have the fate of a potential strike from Cuba to the east coast of the United States, it's 12 minutes away, and you can't do anything about it with a precision weapon that's very, very precise. Sitting there, if you're not scared by that, then what is fear mongering? So back to you.
The silver market has been buzzing with excitement as we witness an increasing number of buyers taking advantage of price dips. Over the past few months, silver has shown remarkable resilience, with prices fluctuating but maintaining a general upward trend. As of the latest reports, silver is experiencing a strong bullish momentum, driven by a combination of technical factors and market sentiment. For instance, recent technical analysis highlights that silver has formed a bullish flag pattern, which is often a precursor to significant price moves. Analysts have pinpointed key support levels around $30 and $29.25, with resistance levels near $31.50 and $32. These levels are crucial as they indicate where buying pressure could push prices higher, or where selling pressure might temporarily halt the upward movement. The market's response to economic indicators, such as the upcoming employment numbers in the United States, will play a pivotal role in the short-term price action of silver. A stronger-than-expected jobs report could strengthen the US dollar, which typically puts downward pressure on silver prices. Conversely, if the jobs data disappoints, we could see a weakening dollar, making silver more attractive to investors. Adding to the excitement is the anticipation surrounding potential interest rate cuts by the Federal Reserve. Wall Street is already speculating that an interest rate cut could be on the horizon, following recent comments from Federal Reserve Chairman Jerome Powell. Lower interest rates generally lead to a weaker dollar and higher commodity prices, including silver. With these factors in play, it's clear that the silver market is poised for some significant movements. The combination of technical indicators, economic data, and monetary policy decisions creates a dynamic environment where silver could see substantial gains. As we continue to monitor these developments, it's essential to stay informed and be prepared for the opportunities that lie ahead.
What I would say is don't. What I would say is you're falling into a typical bull market. And the bull market, as we've discussed before, shakes off as many longs as they can. And this is one of those shake-off points. People that have, maybe they bought it at 18, maybe they bought it at 20, I mean, a 10% gain on that investment, that's 30, 40%. And again, a lot of people, and what I've seen, I mean, and of course I've been around a long time, but it's just my own personal experience. Once they learn the truth about how the monetary system works and what a scam it really is, where a few get to dictate the money power over the many, I've seen it many times where they kind of overdo it. They get it, they understand it, they verify it, they've educated themselves, and it is the truth. And it is a very unfortunate situation. And I'm gonna make it right for what I can control. That's me and my personal finances. So, all my available cash, I'm moving into gold, whatever. And that's an extreme example, but a lot of people do go overboard. And when I put out the 10 rules of silver investing, which could apply to gold investing, apply to other investments actually in some cases. But the idea is to take a long-term view, dollar cost average. And then I said in that rules, I forget which rule it is, but something like too much of a good thing is too much of a good thing. In other words, I was recommending a certain percentage and not to go overboard, because you don't need to go overboard to have a hedge, a balance, and almost a certainty that you have prepared yourself financially for probably a worst case scenario. And that was my, principled approach to try and help everyone that was a new or a seasoned investor in the precious metals, because, like the amount of nutrients or vitamins or whatever, there's kind of the precise amount, so many milligrams on a certain medicine, perhaps. So I'm just giving the idea that you don't need to do too much. But I find over and over that that's the case. And that's why these people feel a lot of pressure when the market moves against them they can hardly wait to break even and sell out. And rather than sell out and get to a portion that's an amount that they're comfortable with, they will sell out the whole thing and forget about it. Then the market moves up $10 against them, or they would have made double their money from 20 to 40, for example. Now they get back in and they left all that on the table. So long-winded answer, but I've seen it over and over. And having that experience, I would say, look, if you have too much, sell down to where you're comfortable. Please don't sell out. You know why you bought it. If the reason you bought it has changed, well, then go ahead and sell. If you bought it to, get a gain so you could pay off a debt or something, and that changed, or that occurred and it happened and you did it, and that's the reason you bought it, okay, fine. But if you bought it for the reason most of us do, and that is to hedge the inevitable, you don't have any reason selling at all. That's for sure.
To understand the potential for silver to skyrocket to $1,000 by the end of summer, it's essential to delve into the technical indicators that are currently signaling a bullish trend. First, let's talk about the bullish flag formation that has been observed in silver's price movements. A bullish flag is a technical chart pattern that indicates a potential continuation of an existing uptrend after a period of consolidation. This pattern is formed when the price experiences a strong upward move, followed by a series of lower highs and lower lows that resemble a flag on a pole. The breakout from this pattern typically signals the resumption of the previous uptrend, often leading to significant price increases. Currently, silver is showing a well-defined bullish flag on its charts, with the price having retraced and now positioned to break out upwards. Key support levels have been identified at around $30 and $29.25, where buying interest is expected to be strong. These levels act as safety nets, providing a cushion against any short-term declines and indicating where buyers are likely to step in and drive the price higher. On the resistance side, silver has targets set at $31.50 and $32. These resistance levels are crucial because once they are breached, they could pave the way for a much larger rally. Technical analysts believe that surpassing these levels could trigger a surge of buying activity, propelling silver prices to new highs. Moreover, the Relative Strength Index, RSI, is another critical indicator to watch. The RSI measures the speed and change of price movements and helps identify overbought or oversold conditions in the market. An RSI value above 70 typically indicates that an asset is overbought, while a value below 30 suggests it is oversold. Currently, silver's RSI is approaching overbought territory, but instead of signaling an imminent decline, it often indicates strong upward momentum in a bullish market. Adding to this technical backdrop, the moving averages are also pointing towards a bullish outlook. The 50-day and 200-day exponential moving averages, EMAs, are both trending upwards, with the 50-day EMA providing a strong support level. This alignment of moving averages often signals a continued bullish trend, further supporting the case for a significant price increase. In summary, the technical indicators for silver are aligned in a way that suggests a strong potential for further gains. The bullish flag formation, key support and resistance levels, RSI readings, and moving averages all point towards a continuation of the upward trend. As these technical signals converge, they create a compelling argument for why silver prices could surge dramatically in the near future.
I don't know. It depends on the area. I mean, if you live in Hurricane Alley, then, chances are you're going to have a problem or a greater potential to have one. Whereas if you live in, a very quiet jurisdiction that's kind of politically neutral, probably less so. But nonetheless, it doesn't mean that preparing is dumb. It's actually very, very prudent. And, you guys have done a lot to bring up that topic with Reluctant Prepper, which you used to have. I don't think you have that domain anymore. Maybe you do. But it's not something that you have to go along with the mainstream's, let's say, bias toward you're a kook or a tinfoil hat or a theorist of some kind if you prepare. I mean, being a Boy Scout at one time and never being an Eagle Scout, but going through the process somewhat, the loyal, trustworthy, friendly, courteous, kind, obedient, you did all those things and you're prepared, always. And this is something that just is a way to be in life. I mean, if you took it outside of the food and water realm and to prepare your mind for something that you can't see in the future, I think is as equally important as having the physical ability to prepare for, let's say, a food, stores closing or something. Because if your mind is sound and you can prepare yourself mentally for hard times, and you go through that, maybe read, different books, Man's Search for Meaning. There's several others, diaries and all this. But regardless, that's a part of it too, Elijah, is that you can prepare for, the potential that lies ahead. I mean, so many books in the Bible look at that same situation where, people are tested for one reason or another, for reasons they don't even understand. And yet, because they have faith and because they have a sound mind, they're able to get through the storm, so to speak.
In addition to the technical indicators, several external factors are currently influencing silver prices and creating a conducive environment for a potential surge to $1,000. Understanding these global economic factors helps paint a clearer picture of why this dramatic price increase is possible. The strength of the US dollar plays a crucial role in the pricing of commodities like silver. Recently, there has been significant speculation about the Federal Reserve's next moves regarding interest rates. A stronger than expected jobs report could boost the dollar, potentially applying downward pressure on silver prices. However, there's a growing consensus among Wall Street analysts, especially after recent statements from Federal Reserve Chairman Jerome Powell, that an interest rate cut may be on the horizon. Lower interest rates typically weaken the dollar, making silver and other commodities more attractive to investors. This dynamic can set the stage for a bullish trend in silver prices. Moreover, global geopolitical tensions often drive investors to seek safe haven assets like silver and gold. Currently, various geopolitical hotspots, including ongoing conflicts and trade tensions, are contributing to market uncertainty. Such environments tend to increase the demand for precious metals as investors look to hedge against potential economic instability. For instance, any escalation in trade disputes or conflicts can lead to a flight to safety, boosting silver prices. With the global economy facing inflationary pressures, central banks worldwide are adopting various measures to stabilize their economies. Inflation erodes the value of fiat currencies, making tangible assets like silver more attractive. Investors often flock to silver during inflationary periods, as it holds its value better than paper currency. Additionally, expansive monetary policies and stimulus measures are flooding the markets with liquidity, some of which inevitably flows into commodities like silver. Silver is not only a precious metal, but also an industrial commodity with diverse applications in technology, electronics, and renewable energy. The ongoing transition to green energy is particularly significant. Silver is a critical component in solar panels, and with global initiatives to combat climate change gaining momentum, the demand for silver in the renewable energy sector is expected to rise sharply. This increasing industrial demand adds another layer of bullish sentiment for silver prices. The rise of retail investors, particularly those coordinating on social media platforms like Reddit, has had a noticeable impact on various markets, including silver. The silver squeeze movement, inspired by the GameStop saga, aims to push silver prices higher by encouraging collective buying of physical silver and silver ETF. This coordinated effort by retail investors can create significant upward pressure on silver prices, especially if it gains more traction. On the supply side, silver production has been relatively stable, but any disruptions in mining activities or supply chain issues can lead to shortages. Given the existing and growing demand, any constraints on the supply of silver can lead to sharp price increases. Factors such as environmental regulations, labor strikes, and geopolitical issues in key mining regions can all contribute to potential supply disruptions. In conclusion, the combination of a weakening US dollar, geopolitical tensions, inflationary pressures, rising industrial demand, active retail investors, and potential supply constraints are creating a perfect storm for silver prices. These external factors, when combined with the technical indicators previously discussed, strongly support the possibility of silver reaching $1,000 by the end of summer. Stay tuned as we delve further into this unfolding scenario, breaking down each element that could drive silver to unprecedented heights.
Exactly where we are, in my view, and I think we have enough data now to make the case. We're in a consolidation period for both gold and silver. What are the exact ranges? I don't know. And they'll vary. It's not like a perfect channel formation between 2,200 and 2,400 for the next 3 or 4 months, but something like that for gold. And silver, obviously, it's gotten below 30 now, so, maybe 29 to 31 in that range. Will it go below 25? I can't say it wouldn't. I doubt it, but it could. But basically, we're doing a trading range. How big or how wide is that trading range? I'm not sure. How long will it take? I don't know. But my guess is for gold, a couple, $300 for silver, $3-4 probably. And I think it'll just go into the late summer. So September, October, I think we'll start to see the metals, regain traction. And of course, and unfortunately, I don't even like saying this, Elijah, but with the war drums beating ever louder as we speak, there's a possibility that gold could go up limit 3 days in a row to basis what's going on between this escalation and talking nuclear more and more frequently. So that's a rather frightening prospect, and we can't rule it out because something like that would override any quote unquote normal activity in the metals market.
The concept of a silver short squeeze is an intriguing and vital piece of the puzzle when considering the potential for silver prices to reach $1,000 by the end of summer. Understanding this phenomenon can shed light on the market dynamics that might propel silver to such extraordinary heights. A short squeeze occurs when investors who have bet against a particular asset, by short selling, are forced to buy back their positions to prevent further losses. This buying pressure drives the price of the asset up, sometimes dramatically. In recent history, we saw a significant short squeeze with GameStop stock, driven largely by coordinated efforts among retail investors on platforms like Reddit. Inspired by this success, a similar movement has emerged in the silver market, known as the silver short squeeze. This movement gained traction as retail investors realized that silver, much like certain heavily shorted stocks, was being manipulated and suppressed by large financial institutions. The idea is to purchase large amounts of physical silver and silver-related assets, such as ETF, to create scarcity in the market. This scarcity can force those holding large short positions to cover their shorts by buying silver at higher prices, thus driving the price up further. The silver short squeeze movement is not just about making a quick profit. It is also a form of protest against what many perceive as unfair practices by big banks and financial institutions. By banding together, these retail investors aim to expose and challenge the alleged manipulation of silver prices. This collective effort has already led to significant price fluctuations and increased volatility in the silver market. One of the critical aspects of the silver short squeeze is the sheer size and scale of the silver market compared to individual stocks. Silver is a globally traded commodity with substantial industrial demand, making it more challenging to influence its price. However, the determination and buying power of retail investors should not be underestimated. Their coordinated buying efforts can still create significant upward pressure on prices, especially if they manage to sustain their momentum. Adding to this, the growing demand for physical silver, as opposed to paper silver, is creating additional pressure. Major bullion dealers have reported record sales, and at times, even shortages of physical silver. This indicates that the squeeze is not just theoretical, but is having real-world impacts on the supply and demand dynamics of the silver market. The silver short squeeze phenomenon is further fueled by social media and the ability to quickly mobilize large groups of investors. Platforms like Reddit, Twitter, and YouTube play a crucial role in spreading the message and encouraging more people to join the movement. This social aspect adds a layer of unpredictability and excitement to the market, as it is driven by both financial incentives and a shared sense of purpose. In conclusion, the silver short squeeze is a powerful factor contributing to the potential for silver prices to skyrocket. The combination of retail investors' coordinated efforts, the increasing demand for physical silver, and the influence of social media creates a unique and dynamic environment. As this movement continues to gain momentum, it could significantly disrupt traditional market forces and propel silver prices towards unprecedented levels. Stay tuned as we explore more about this fascinating development and its implications for the silver market.
That's a tough one. First of all, I'll say it's individual. I mean, if you have a different belief than me, then certainly, you have the right to that. I'm, not nearly the student of conflict that David Smith was. I mean, mostly in-depth, peeled down to the, core of the onion. I mean, David did that. He studied, every conflict from, I don't know what, Genghis Khan on. I mean, he really did have a good mind at history and spent a lot of time in that arena. I have not. Point being is that you need to be prepared for a potential conflict, but let's take the conflict out of the equation for a moment and just say, what's the probability of a climate event? What's the probability of a food shortage? What's the probability of a boycott? Truckers don't come into your town. I mean, there's lots of other possibilities outside of our control, let alone a potential conflict that would cause the need to have food set aside, water set aside, perhaps a different communication system placed or a plan that your family could gather if there was, let's say, an emergency broadcast system saying, you got to hunker down or whatever. So these are one-offs. I mean, these are not something that you absolutely know is going to happen. But if you prepare for them and they never happen, you're prepared. And if I'm wrong and, you never have a climate event or whatever, you can still eat the food. I mean, it's a no-lose game. And that's what upsets me about people that don't prepare, is that you can't lose with it. It's not hurting you to do it. In fact, let's just say that you have, prep 6 months worth of ready-to-eat meals, which is, kind of the more expensive but easy things to do if you have the means to do it. And you just don't feel like cooking out. I mean, you can take all those things off the shelf and cook it for dinner. I mean, it's not like if you buy it, it makes a problem happen. It's really the opposite. You're buying it in case a problem happens. And what is the problem? It's potential. 1%, 10%.
Another critical element driving the potential surge in silver prices is the increasing industrial demand, particularly from the renewable energy sector. Silver is a versatile metal with a wide range of applications, and its role in green technology is becoming increasingly significant. The push towards renewable energy sources, driven by global initiatives to combat climate change, has created a substantial demand for silver. One of the most prominent examples of this is the solar energy industry. Silver is a key component in the production of solar panels due to its superior electrical conductivity. As countries around the world strive to meet their renewable energy targets, the demand for solar panels is skyrocketing, and with it, the demand for silver. For instance, Recent reports indicate that the global capacity for solar power installations is expected to continue growing at a rapid pace. Major economies such as the United States, China, and the European Union have set ambitious goals to increase their reliance on renewable energy, further boosting the demand for silver. In China alone, the government's push for solar energy expansion is projected to drive a significant portion of the global demand for silver in the coming years. But it's not just solar energy driving this demand. Silver is also crucial in the production of electric vehicles, EVs. EV require significantly more silver than traditional internal combustion engine vehicles due to their reliance on advanced electronics and battery systems. As the market for electric vehicles continues to grow, with companies like Tesla leading the charge, the demand for silver is set to increase substantially. Additionally, silver's antimicrobial properties make it invaluable in the healthcare industry. The ongoing global health concerns have heightened the demand for antimicrobial products, including those that use silver. This adds another layer of industrial demand, further supporting the bullish outlook for silver. Investments in infrastructure and technology are also contributing to this trend. For example, the increasing deployment of 5G technology relies heavily on silver due to its excellent conductivity and reliability. This technological shift is another driver of demand, as more countries and companies roll out 5G networks worldwide. Moreover, the adoption of silver in other high-tech applications, such as the development of flexible electronics and advanced batteries, is expanding its industrial uses. These innovations highlight silver's critical role in the modern technological landscape, ensuring that its demand remains robust across various sectors. Given these factors, the industrial demand for silver is poised to remain strong, supporting higher prices. The combination of renewable energy initiatives, the expansion of electric vehicles, advancements in technology, and healthcare applications creates a multifaceted demand that bolsters the bullish case for silver. In summary, the increasing industrial demand for silver, driven by renewable energy, electric vehicles, healthcare, and technological advancements, is a significant factor contributing to the potential for silver prices to skyrocket. This demand, coupled with the other factors we discussed, creates a compelling argument for why silver could reach $1,000 by the end of summer. Stay with us as we delve deeper into these market dynamics and explore expert opinions in the next section.
Zero, having extremely bullish fundamentals and the potential for increases in value. So it seems like, as you're saying, really questioning why are you wanting to sell is a really good point.
Well, thank you. I'm glad you asked. I mean, that's, my take. Of course, I am, somewhat biased. I mean, but if you look at those 10 rules of silver investing, I mean, I'm speaking about, words I wrote on a piece of paper, 2 decades ago, but I think it's very objective as far as why you want to have some, why you don't want to overload, why you want to do it over time, why you want the discipline of a dollar cost average, and all of that. And 10 simple rules. I mean, it wasn't as if, there's a great deal of thought in it, and there was just a principled approach and being, again, objective to try and help everybody. Because, the adage that you'll hear from, a lot of dealers, I won't say that Miles Franklin says this, although Andy may have said it, but, in the old days when I got started in the precious metals, it was, everybody should own a little. Well, who's everybody and what's a little? And I did a video on that called Missing the Silver Market. You can watch it, look it up on my YouTube channel if you wish. But not everyone can buy a little bit of silver. It's way too precious. So, what is a little? I mean, 2 ounces? 2 ounces is not going to protect your financial stature. You're going to need, depending on your lifestyle, your income, all that. But I would suggest probably, 100 ounces at a minimum, if not closer to 500 for the average, American that's able to save. And I know there's a lot of people that can't. I'm certainly, empathetic about that. But, if everyone in America had 500 ounces, I mean, you'd wipe out the silver supply very, very quick.
To further bolster the case for a dramatic rise in silver prices, we turn to the insights and predictions of market experts who have been closely monitoring these developments. Renowned analysts, including David Morgan, are providing compelling arguments and forecasts that support the notion of silver reaching unprecedented heights. David Morgan, a well-respected figure in the precious metals community, has recently made bold predictions regarding silver's future. According to Morgan, the current market conditions are creating a perfect setup for silver to experience a massive price rally. He points out that the combination of strong industrial demand, economic uncertainties, and investor interest is aligning to drive silver prices higher. Morgan emphasizes the role of monetary policies and inflation in this scenario. With central banks around the world continuing their expansive monetary policies, the risk of inflation is ever present. As inflation erodes the value of fiat currencies, assets like silver become more attractive as a store of value. This dynamic is particularly relevant now, as many economies are grappling with the aftereffects of pandemic-related stimulus measures and ongoing geopolitical tensions. In addition to Morgan's insights, other market experts are echoing similar sentiments. Analysts from major financial institutions are increasingly bullish on silver, citing the metal's strong fundamentals and favorable market conditions. For instance, recent reports from leading investment firms highlight the rising demand for silver in industrial applications and its role as a hedge against economic instability. One of the critical points made by these experts is the ongoing transition towards green energy and how it is expected to drive substantial demand for silver. As previously discussed, the push for renewable energy sources, particularly solar power, is creating a long-term demand trend that will likely support higher silver prices. This is not a short-term phenomenon, but rather a structural shift in the global energy landscape that could sustain silver's bullish trajectory for years to come. Furthermore, experts are paying close attention to the actions of retail investors. The silver short squeeze movement has shown that retail investors can significantly influence market dynamics. The continued interest and participation of these investors add another layer of support for higher silver prices. Their collective buying power and determination to challenge traditional market forces are factors that cannot be overlooked. Another aspect highlighted by analysts is the potential for supply constraints. While silver production has been relatively stable, any disruptions in mining activities or logistical challenges can create shortages. This is particularly relevant in a market where demand is growing across multiple sectors. Experts warn that supply-side issues, combined with increasing demand, could create a perfect storm for silver prices to surge. In summary, the insights and predictions from market experts like David Morgan, along with analysts from leading financial institutions, strongly support the potential for a significant rise in silver prices. The combination of robust industrial demand, inflationary pressures, active retail investors, and possible supply constraints creates a compelling case for why silver could reach $1,000 by the end of summer. As we move towards the conclusion, we'll tie together all these elements to illustrate how this extraordinary price target could become a reality. Stay with us as we explore the final step in this journey.
Well, let's start off the Commitment of Traders report. I'm pretty good at reading it. No one's got it exact, but you can see the trends are pretty obvious if you studied it for very long and a half of years. I just took a look at it. The open interest really hasn't dropped that much on the last report. So, and the way it was stacked up just a few weeks ago, it was indicating that the metals had reached a peak and we're on the decline. I mean, my friend Chen Lin is very smart and very good. He saw room for it to expand, for open interest to increase, and he was right. It had the potential to do that. But the way I saw it was seeing the same thing and seeing it differently. I thought we were close enough to what we considered to be the max participation for longs and shorts. And basically, when you get to that high level, that's about all she wrote. And you're going to see a correction in the metals. And the game is going to go down to a certain level in the open interest. And once it achieves that, we'll start back up. And it's not a perfect timing mechanism. It's more like a barometer. It gives you a very good signal of what's ahead. You just don't know if it's a day, a week, or a month ahead or 2 months, but it's okay, we're pretty much topped here. So that doesn't surprise me. As far as the fundamentals go, it's a very interesting market because the fundamentals, as you well know, and your viewers know, we are at a point where fundamentals continue to get better and better, not only from the reasons to own gold, as we just outlined, but the fact that the central banks are leading the way and indicating that the smart money or smartest money is and has been moving into gold in a very deliberate manner. On top of that, if you look at the silver side of the equation, retail's pretty much been left out of this move. A lot of retail said, okay, I got $30 silver or $31 silver. I paid a very high premium months ago when silver was at 25 and it seemed like the retail market was extremely tight and premium shot up and paid $30 for $25 silver. Well, now you can go and cash out at, break even or maybe a slight profit. Maybe you bought too much. Maybe you don't believe the story. Maybe you just want to rebalance your portfolio. Who knows? But the facts are that the wholesale market is getting more sellbacks than buys from 3 or 4 that I'm very familiar with and can call and get direct information. But that doesn't mean that the market isn't fundamentally more bullish. And this is what we're seeing on the industrial side and the investment side outside of India and China. I mean, China has caught the silver bug, and their investment community is certainly participating in this rally, as well as the industrial commodity for use primarily in solar panels. And the same thing holds for India. So it's a very interesting market at this time, but the strength is still there. I'm not taking back what I said. We're going to consolidate. We're going to be in a trading range, but the fundamentals.
To bring everything together, let's summarize how all these factors could converge to drive silver prices to $1,000 by the end of summer. This extraordinary price target might seem improbable at first glance, but when we examine the interplay of technical indicators, market dynamics, expert predictions, and broader economic trends, the picture becomes much clearer. Firstly, the technical indicators are painting a bullish outlook for silver. The formation of a bullish flag, coupled with key support and resistance levels, suggests that silver is poised for a significant breakout. The Relative Strength Index, RSI, and moving averages also support this bullish sentiment, indicating strong upward momentum. Externally, the strength of the US dollar and potential interest rate cuts by the Federal Reserve are crucial elements. A weaker dollar, driven by lower interest rates, typically boosts silver prices as it becomes more attractive to investors looking for a hedge against currency depreciation. Additionally, global geopolitical tensions and inflationary pressures are pushing investors towards safe haven assets like silver, further supporting higher prices. The concept of a silver short squeeze, inspired by movements like Wall Street bets, adds a layer of unpredictability and excitement to the market. Retail investors, galvanized by a shared sense of purpose and collective buying power, are creating significant upward pressure on silver prices. This grassroots movement highlights the power of coordinated efforts to disrupt traditional market forces. Industrial demand is another critical factor. The ongoing transition to renewable energy, particularly solar power, is driving substantial demand for silver. Silver's role in electric vehicles, healthcare, and advanced technologies further underscores its importance in the modern economy. This growing industrial demand is not a short-term trend, but a long-term shift that will continue to support silver prices. Expert opinions, including those from renowned analysts like David Morgan, reinforce the bullish outlook. Their predictions, based on a deep understanding of market fundamentals and economic trends, suggest that silver is set for a significant rally. Morgan's insights into the impacts of monetary policy and inflation, coupled with the broader market dynamics, add credibility to the $1,000 price target. Finally, potential supply constraints cannot be ignored. Any disruptions in mining activities or logistical challenges could create shortages in a market where demand is already robust. This imbalance between supply and demand would naturally lead to higher prices. Bringing all these elements together, we see a compelling case for why silver could reach $1,000 by the end of summer. The technical indicators, combined with supportive economic conditions, growing industrial demand, active retail investor participation, expert predictions, and potential supply constraints, create a perfect storm for silver prices to surge. As we conclude this journey, it's clear that the silver market is at a pivotal moment. The convergence of these powerful forces suggests that an extraordinary price movement is not only possible, but increasingly likely. This is an exciting time for investors and market watchers alike, as we stand on the brink of what could be a historic rally in silver prices. Make sure to stay tuned to our channel for more updates and insights as this situation unfolds. Don't forget to subscribe to stay informed about the latest developments in the silver market and other investment opportunities. And remember, while the potential rewards are significant, it's essential to approach investments with caution and conduct thorough research. This video is not financial advice, but an exploration of one of the most exciting possibilities in the market today. Thank you for watching, and we'll see you in the next video.